Students, herewith is lecture 2 on the completion of the audit. We still had 2 stages that we needed to deal with. It is stage 6, concluding and reporting, and stage 7, which is the post-audit review. Now, stage 6 is relatively long. So what we'll do is we'll first have a look at stage 7, which is your post-audit review, and then we'll come back to stage 6. So in this post-audit review, there are a few things that the auditor needs to consider and also do. First thing is the auditor needs to perform an evaluation of all of the staff members that was on the audit. Then the auditor needs to consider whether any aspects came up during the audit that they need to consider for the next year's audit. You also consider the viability of re-engagement and issuing a letter of engagement for the next year if necessary. And then lastly, you have to invoice the client for your audit services that were provided. We'll now go back to stage 6, which is concluding and reporting. It is important for you to know that there were changes in the reporting standards when it comes to reporting. The main standard that changed here is ISA 700. And the effective date of this change was for periods ending on or after 15 December 2016. There was a need for this change to take place, and the new standard or the revised standards provides greater transparency about the audit that was performed and also increases the communication or the information value of the audit report to its investors and other stakeholders. So here's a summary of the changes that took place. ISA 700, which is the standard on auditing, the audit opinion and reporting, was revised. ISA 701 on key audit matters is a new standard that was introduced. ISA 705 on the modification to audit opinions was revised. And ISA 706 on the emphasis of matter paragraph was also revised. Concluding and reporting can be split between 2 different aspects. So the first one is reporting on financial statements and having a look at audit reports giving reasonable assurance. And the second aspect is reporting on special purpose engagements. So what we'll have a look at now is reporting on financial statements. As per ISA 700, forming an opinion and reporting on financial statements, there are 11 elements that have to be present on the audit report. I've listed them there, and we're going to go through each element separately now. The first element that we'll be dealing with is the title and addressee. Here you see an example of the title and the addressee. So the report is headed Independent Auditor's Report. That is the same for all of these type of reports. This report is addressed to the person or persons for whom the financial statements have been prepared. In this case, it's to the shareholders of Harmony Gold Mining Company Limited. The heading that you see beneath that report on the audit of the consolidated and separate financial statements is actually unnecessary if there is no report on other legal and regulatory matters. The second element of the audit report is the audit opinion. The audit opinion will either be an unmodified audit opinion or a modified audit opinion. In the case of an unmodified audit report or audit opinion, obviously there your opinion will be unmodified or unqualified. If you've got a modified report, your opinion could either be unqualified or modified. So if it is an unqualified audit opinion, it will then be with a modification, for example, an emphasis of matter paragraph. If your opinion has been modified, it will be one of 3 things. You'll have a qualified opinion, or an adverse opinion, or a disclaimer of opinion. When the auditor is deciding on which audit opinion they have to issue, there are certain decisions affecting that audit opinion that they need to take. So the first thing is they need to assess the sufficiency of the audit evidence that they obtained. Was the audit evidence sufficient and appropriate enough for them to express that audit opinion? The second thing is, did they take action to avoid any modification? Did they have discussions with management? Did they give management the options and tell them what they needed to do to avoid a modification? Okay, so what actions did the auditor take to avoid modification? And then anything else that can affect that audit opinion. What should my way of thinking be to decide on the type of audit opinion? There are 3 steps here that you can follow. Step 1 is assessing the nature of the matter. Was there a disagreement with management? Was it perhaps a limitation of scope? Is it just a matter that needs to be emphasized, or is it any other matter? The second step that you need to consider here is, was the reason for your qualifying the audit opinion, was it material, or was it material and pervasive? Pervasive meaning that it affects the majority of your financial statements. So what was the amount of the actual misstatement? And what was the nature of this incident that happened? Is it qualitative in nature? Is it quantitative in nature? Then step 3 is then deciding on the type of audit opinion. Will it be unmodified, qualified, an adverse opinion, or are you going to withhold your opinion? In other words, a disclaimer of your opinion. So let's unpack those 3 different steps. Firstly, we look at step 1. What was the nature of the matter? And here you could be faced with a possible limitation of scope. Now, a limitation of scope is one of 2 things. It could either be imposed by circumstances, all right? So, for example, the auditor couldn't attend a stock count, or it could be imposed by the client, all right? And here, for example, you're looking at where the auditor was denied access to certain information. Let's have a look at an emphasis of matter paragraph. Now remember that ISA 706 is applicable in this case. An emphasis of matter paragraph basically highlights an important matter which has been correctly dealt with in your financial statement. In other words, there's no effect on your audit opinion. Examples of an emphasis of matter paragraph includes an uncertainty regarding pending litigations, or an early adoption of a new accounting standard, or subsequent event disclosure. Important with an emphasis of matter paragraph is that the matter has been dealt with correctly in your financial statements. The other matter paragraph is also dealt with in ISA 706. Now this type of paragraph serves as a communication of information that is relevant to the audit, but the issue is not presented elsewhere in your financial statements. Important also that the other matter paragraph also has no effect on your audit opinion. Examples of this type of paragraph would include a restriction on distributions of audit report, or the auditor wasn't the auditor in the prior year. Just a reminder again on the different audit reports that can be issued. We'll move on to a little bit of detail on this right now. I want us now to focus on the case of a modified report. Remember that we are guided by ISA 705 modifications to the opinion in the independent auditor's report here. So you've got one of 2 scenarios here. You've got a matter that does not affect the auditor's opinion. It only highlights a matter but does not change the opinion. In this case, you have an unqualified audit opinion with an emphasis of matter paragraph. You do, however, also have matters that do affect the auditor's opinion. Now, you've got one of 2 scenarios that could be applicable in this case. If the financial statements are materially misstated as a result of a disagreement with management. If the matter is material and pervasive, you will issue an adverse audit opinion. If that matter is material but not pervasive, you will issue a qualified audit opinion. Now, if there is an inability to obtain sufficient and appropriate audit evidence, there is an uncertainty, or there is a scope limitation. Again, if that matter is material but not pervasive, you will issue a qualified audit opinion. However, if the matter is material and pervasive, you will issue a disclaimer of your opinion. Here we have an example of the auditor's opinion. Okay, so if the modified opinion is issued, the heading is then changed to a qualified opinion or an adverse opinion or disclaimer of opinion. Okay, that's the first paragraph. That's where you give your opinion. Within that paragraph, you have to state the accounting framework that was used. All right. The second paragraph there, you give a little bit of detail that relates to your opinion. Okay, so the paragraph then states that the financial statements have been audited, identify each of the financial statement components, specify dates and period. So what exactly have we audited? The third element of your audit report that we'll have a look at now is your basis for opinion. So here you'll see an example of your basis for opinion paragraph that needs to be included in your audit opinion. If the modified opinion is issued, then the heading would then change to qualified opinion or adverse opinion or disclaimer opinion. So within that basis of opinion paragraph, it is also important to state that you have done your audit in accordance with international standards on auditing, or ISAs. Right? You also need to state in that paragraph that the audit evidence obtained is sufficient and appropriate to provide a basis for your opinion. Also important here is your declaration of independence. The fourth element that we'll have a look at now is your material uncertainty related to going concern. The standard that we need to apply when it comes to going concern is ISA 570. Now, ISA 570 gives an explicit description of the responsibilities of management when it comes to going concern, and also the responsibilities of the auditors in the audit report in terms of that going concern. Next, we move on to key audit matters, which is the fifth element of your audit report. Remember that ISA 701, communicating key audit matters in the independent auditor's report, is a new standard that was introduced in 2016. And the standard defines key audit matters as the following: that those audit matters that in the auditor's professional judgment were of most significance in the audit of the financial statements of the current period. There is a decision tree that you can follow when deciding on whether or not a matter is a key audit matter. So the first question there is, have these matters been communicated with those charged with governance? That's the first step. Did the matter require significant audit attention? That's the second question. And then the third question is, was the matter of most significance in the audit? If the answer is yes to these three questions in your decision tree, then you definitely have a key audit matter. Here is just a few examples of what key audit matters within different companies could be. If you've got a property company, a key audit matter could be the fair value of your investment property or the impairment of that property. In a construction company, a key audit matter could be the recognition of contract revenue or the impairment of the plant. For a furniture retailer, a key audit matter could be the recoverability of receivables or the valuation of inventory. Whereas for banks, a key audit matter could be the valuation of financial instruments. So you'll see the key audit matters really depends on the nature of the company that you're auditing. So here we've got an example of your key audit matters paragraph. Important to remember that it is only applicable for certain entities, and those are as follows. For listed entities, if a law or regulation requires the disclosure of key audit matters, or it could be that the company voluntarily decides to include it after consultation with those charged with governance. Okay, so it's not for all entities. It is applicable only then to those entities. The second part of that paragraph then describes how the matter was addressed in the audit. And then you've got a third section there where you have to reference to related disclosure on the matter if it is applicable. We'll now have a look at the sixth element of your audit report, which is management's responsibility. Here you'll see an example of a paragraph relating to management responsibilities. You'll see the heading there reads, Responsibilities of the directors for the consolidated and separate financial statements. If those responsible for the financial statements are different to management, then the heading is then changed to those charged with governance. Important to remember that. Then the paragraph basically just describes management's responsibilities for the preparation and fair presentation of financial statements, and that it is in accordance with financial reporting framework, and that is described, and that includes two things. Firstly, assessing and monitoring the ability to continue as a going concern, and then secondly, maintaining those internal controls. The seventh element then of your audit report is the auditor's responsibility. Here you'll see an example of such a paragraph that talks to the auditor's responsibility. Now, the responsibility of the auditor, as you know, is to obtain reasonable assurance that the financial statements are free of material misstatement, and that whilst reasonable assurance is a high level of assurance, it does not guarantee the absence of a misstatement. All right, so that it's very important that that message comes through in this paragraph. Furthermore, you'll see that additional detail concerning the auditor's responsibility is given here. It includes that the audit is based on the ISAs and basically just a short summary of the audit process, and then also information regarding the auditor's conclusion on the appropriateness of management's use of the going concern basis of accounting is then also included in this paragraph. If the company is a listed company, then you report to those charged with governance, providing a statement concerning the ethical compliance governance, and then also state that the auditor reports key audit matters and report to those charged with governance. In the case of consolidated financial statements, if the consolidated financial statements where certain subsidiaries are audited by other auditors, the report should state that the group auditor is solely responsible for the group. Now, this is not applicable in our specific example, but it is important to remember where you are in a group situation. The eighth element of the audit report is then other auditing responsibilities. ISA 706 is relevant in this instance, and here you can see an example of a report on other legal and regulatory requirements. So if the auditor is required to address other reporting responsibilities in addition to the ISAs, that has to be stated in this paragraph. Element number 9 in your audit report is supplementary information. And then lastly, elements number 10 and 11 deals with the auditor's signature and name of registered auditor or firm, And then lastly, the auditor's address and date of report. Here you'll see an example of that signature. So included here is the signature, the name of the registered auditor or firm, the auditor's address, and the date of the report. So the audit opinion has to be signed. That's very important. And it's signed either in the name of the firm or the personal name of the auditor, or both. If it is a listed company, the individual auditor's name should be given. The following elements should also be there. The auditor's professional designation, so whether they are CA, SA, CA, NAM, and the auditor's licensing designation. All right, so the fact that they are a registered auditor and that their number that indicates that they are a registered auditor. Then also the location or jurisdiction where the auditor practices is important there, so that address. And the report date, or the date of the report. It should not be earlier than the date on which sufficient and appropriate audit evidence was obtained, and also it should not be earlier than the date on which the relevant governance body, for example, the board of directors, have accepted responsibility for these financial statements. So there you go. These are the 11 elements that have to appear on your audit report. There are some other considerations that the auditor needs to take into account. When it comes to comparative information, they need to take ISA 710 into consideration. Other information in a document contained within the audited financial statement is covered by ISA 720. Then the communication of audit matters to those charged with governance, where you'll find guidance in ISA 260. And then also financial reporting frameworks in terms of SAAPS 2. That brings us to the end of these 7 stages and also the end of this topic, which is the completion of the audit. A useful link here has been provided to you, where you can also go and have a look at this topic presented on YouTube. Thank you for your attention. That brings us to the end of the completion of the audit.